Welcome back to the show that nobody watches. On today's episode, we're going to continue where we left off, that is, your mom's house. Okay, so my producers told me that was an inappropriate comment and that I need to apologize, so sorry or whatever. Back to finance. On the last episode, we spoke about investments, its sectors, the risks, and the returns. Let's dive deeper, shall we? So, number one rule of investing is always try and diversify them. Basically, do not put all your eggs in one basket. That always calls for trouble. One way of doing that is investing in, drum roll, somebody please tell me my line. I forgot my line.
Mutual fund.
Yes, mutual funds. I knew that. Mutual funds. Now, mutual fund is a type of investment where you can invest in multiple sectors at a time. An asset management company, AMC, is the company that opens these mutual funds. Now, what these companies do is they take yours and many people's money and invest them collectively in various investment sectors. They do this by taking a help of an expert, like me. Just kidding. Whatever profit comes from the investment, the AMC takes a small percentage, it's usually about 1 to 2%, and the rest of the profit will be yours, depending on the return rate. Koi pani do yaar. Too long this shit is taking. There are tons of well-known companies and banks that have opened their own AMC. For example, there's ICICI, there's Aditya Birla, there is PNP, etc. Each of these companies open different and various types of mutual funds to cater to the investors' requirements. For example, ICICI has about 1200 types of mutual funds. इस पे रिसर्च करते करते बुढ़ापा आ जाएगा. So, how risky is it to invest in a mutual fund? Definitely not as risky as
stepping outside without wearing a damn mask.
Stop that, man. Do better. See, how risky a mutual fund is, that completely depends on what kind of mutual fund you're investing in. A mutual fund can give you a minimum return rate of 4% and a maximum return rate of 30% and above. Now, obviously, there are different types of mutual fund. There is equity mutual fund, there is debt mutual fund, and there is hybrid mutual funds. On today's episode, we are going to focus on equity mutual funds because I don't get paid enough to cover all of them in a single episode. Equity mutual fund is the one where your money is invested in the stock market. So generally, this mutual fund has higher risk, but also has the potential to get you higher returns. But that completely depends on what type of stock the AMC choose. There are three types of stocks the AMC could choose: small cap, medium cap, or large cap. Now, these are very simple to understand. You'd have to be really stupid to not get this. What? I can't call the audience stupid. Oh, come on. So, what are large caps? Large caps are the well-known / established companies. These are relatively less risky as the growth of the company is not as drastic as, say, a small cap company. So the returns are also slightly low, whereas the risk in the small cap company is higher, but so are the returns. And if you talk about mid caps, they are sort of like the middle ground. ICICI Prudential Blue Chip Equity Fund is an example of a large cap mutual fund. If you invest in this mutual fund for about a year, your expected returns would be around 11%. Now, suppose you don't want to invest in just one particular type of cap. You can opt for something that is called Diversified Equity Fund. Our second host, the nerd, will help you with this one. What is up, nerdy boy?
What's up? Yes, what is up? I will tell you what is up. बीच में मत बोल यार, मुश्किल से रट्टा करके आया हूँ मैं. What's up? What is up? What was the question again?
Diversified Equity Fund.
हाँ, flow में याद है. Diversified mutual fund is where the AMC will break down your investments and they will invest your money in all the buckets. That is small cap, medium cap, and large cap. It is also known as multi-cap fund. So investing in this will be less risky. Okay, another type of equity mutual fund I have to explain is ELSS. 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 भूल गया. Okay, ELSS, which is known as Equity Linked Saving Scheme, is a special type of mutual fund investment that helps you save tax. In this investment, the AMC deliberately invests your money in stocks that bear higher risk so that you get higher returns. Sheesh, हो गया.
Not exactly the presentation I was expecting, but he's got the right spirit. Anyway, before we end today's episode, let's run through our last two equity mutual fund, that is sector mutual fund and index mutual fund. Sector mutual fund. Here the AMC will invest your money in a particular sector. It could be agriculture, it could be transport, it could be logistics, etc. Here the risk is slightly higher since your return basically depends on a particular sector to flourish. Finally, index funds. These funds are passively managed. Here, the AMC or the fund manager are not constantly investing your money in the market like they do with the other sectors, but passively manage it. The returns here highly depend on the Sensex and Nifty. Thank God! And with that, we end today's episode. If you liked it and if you learned something, hit the like button. If you didn't and you hate my stupid face, I'll say it again. You got shitty taste.